Imagine a future where your investments are fueling the most innovative and rapidly advancing sector of the economy. Yes, we're talking about the technology sector. It's an exciting realm where visionaries and game changers are constantly pushing the boundaries of what's possible. They were going to be looking into IYW, the iShares technology ETF, and a few others. If you're looking for the numbers in the performance breakdown, skip to minute 201. But here's some important information on why the technology sector is so important. This is a space where ideas transform into innovations and inventions that not only change the way we live, but also shape the future of humanity. Investing in the tech sector is like buying a ticket to this thrilling journey of discovery and advancement. You are not just putting your money into businesses, but you're backing the minds that are creating the future right before our eyes. From artificial intelligence to blockchain, from cloud computing to quantum computing, the tech sector is where the future is being built. But how can you, as an investor, tap into this vibrant and dynamic sector? One way is through technology exchange-traded funds, or tech ETFs. These investment vehicles allow you to buy a piece of this exciting world. By investing in a tech ETF, you get exposure to a broad range of tech companies, from tech giants to promising startups. It's like owning a slice of the tech sector in your portfolio. But it's not just about the thrill of being part of this innovative world. The tech sector has also shown strong growth potential. Over the past decade, it has outperformed many other sectors, delivering impressive returns to investors. And as technology continues to evolve and permeate every aspect of our lives, this growth trend is set to continue. However, as with any investment, it's essential to do your research and understand the risks involved. The tech sector is known for its volatility, with high rewards often coming with high risks. Therefore, it's crucial to consider your investment goals, risk tolerance, and time horizon when investing in tech ETFs. Investing in technology ETFs is not just about profits. It's about being part of the future. By investing in the tech sector, you're not just aiming for financial growth, but you're also supporting the innovations that are shaping our world. Now that we've piqued your interest in tech sector investments, let's delve into the performance of some popular tech ETFs. The Shares US Technology ETF, Fidelity MSCI Information Tech ETF, and Invesco QQQ Trust have all shown substantial growth from their initial balances. But how do they compare? The Shares US Technology ETF takes the lead with the highest compound annual growth rate, or KGR, at a whopping 20.35% and the highest final balance. This indicates a strong performance. Hot on its heels is the Fidelity MSCI Information Tech ETF, with a slightly lower KGR, but still demonstrating impressive growth. As for risk measures, all three portfolios have relatively similar standard deviations, which suggest similar levels of risk. However, the Shares US Technology ETF pulls ahead with the highest Sharpe and Sortino ratios, indicating better risk-adjusted returns compared to the other two portfolios. Next, let's consider market correlations. All portfolios have positive correlations, suggesting they are positively influenced by market movements in the technology sector. The Invesco QQQ Trust may have the lowest final balance in KGR among the three portfolios, but it still demonstrates respectable growth and risk-adjusted returns. Let's not forget about expense ratios. The IYW has an expense ratio of 0.4%, the FTSE at 0.08%, and the QQQ at 0.2%. These are additional costs to consider when choosing your ETF. So there you have it. Each ETF has its unique strengths and weaknesses. The Shares US Technology ETF shows strong performance and better risk-adjusted returns. The Fidelity MSCI Information Tech ETF follows closely behind, and the Invesco QQQ Trust offers respectable growth. Clearly, each ETF has its strengths and weaknesses, but all have shown substantial growth and impressive performance. Investing in tech ETFs sounds exciting, right? But remember, it's essential to consider a few key points before diving in. First and foremost, conducting thorough research is paramount. The technology sector is known for its rapid advancements and innovations, but it's also known for its volatility. Therefore, understanding the market trends, the companies that make up the ETF, and the overall health of the sector is crucial. Next, consider your individual investment objectives. Are you looking for long-term growth or short-term gains? Are you comfortable with the risks associated with the tech sector? Or do you prefer a more conservative approach? Your investment objectives should align with the ETF you choose. Risk tolerance is another significant factor. Tech ETFs, like the technology sector itself, can be quite volatile. If watching your investment fluctuate makes you uneasy, a tech ETF might not be the best choice. However, remember that with greater risk often comes greater reward. Your investment horizon is equally important. If you're planning to retire in a few years, a volatile tech ETF might not be the best choice. But if you have a longer time frame, you can potentially ride out the market's ups and downs. Also, don't forget to factor in the expense ratio. This is the cost of managing the ETF, and it can eat into your returns. For instance, the IYW expense ratio is 0.4%, while the FTC expense ratio is 0.08%, and the QQQ expense ratio is 0.2%. Lastly, consider the strategy of dollar-cost averaging, which involves investing a fixed amount at regular intervals regardless of the ETF's price. This approach can help mitigate the risk of market volatility by spreading your investments over time. Remember to subscribe so I can bring you more content as well. And if you comment on what fund you'd like to see in the future, I'll be able to make a video on it. So, are you ready to ride the wave of technological advancement with your investments? Remember, the future is in your hands, or rather, in your portfolio.